Hello guys, I am thrilled to have here in the Vendor Insurance Solutions studio, Greg Robinson, Senior Vice President Banker with Umpqua Bank. Greg, thanks for joining us.
Lisa, thanks for having me.
So today we're going to talk about some of the things that Greg has seen impacting contractors in 2021.
As we've gone a year into COVID, now it's supply chain disruption. It's huge and it's impacting everyone.
Supply chain is definitely an issue. I've been talking with some of my framing contractors and the cost of their lumber for their jobs has gone up significantly.
Oh, and it's not just timber. Timber is kind of leading the way in terms of how much it's gone up, but that goes to pipe, sheet metal, probably in the electrical space as well. How are the contractors that I'm talking to dealing with that? Most of the time you've got material escalation clauses already built into your contracts, and hopefully that you did. For generals, you need to make sure that your subs can perform and that they get the materials that they need on time. And for owners, I think one of the big things that's happening is you have to think about how it impacts your financing.
There are framing contractors in the Bay Area who've walked off of jobs because they didn't have the correct cost components in their bids or in their contracts, and they just weren't able to reach an agreement there, and that's a situation that nobody wants to see. So Greg, talk to me a little bit about what that process looks like now as a banker as you're evaluating a project.
Yeah, absolutely. I mean, with the increased costs, we're looking at not only the strength of that contractor and their ability to perform on that. You do look at a couple of the prime subcontractors involved, depending upon the nature of the project, and obviously the wherewithal of the owner. Do they have the wherewithal to be able to cover those costs if there's not enough contingency already written in to the construction loan to begin with? So a lot of moving parts, but it is possible that an owner would end up having to come out of pocket in order to get the job complete.
If you're going to get a job, what does the supply look like as far as the timing of the materials you'll be taking possession of? What are the terms with that supplier? What's your relationship like with the general contractor as well? Also seeing some of our contractors lock in supplies as soon as they do get that awarded job so that there's not going to be a surprise for them. And another thing we're seeing more of our clients do is consider bonding. So bonding for the subs that work for them, or if they're the project owner, bonding perhaps even the GC in private contracts where you may not have seen that in the past. And it does a couple of things for you, right? One is you do have that guarantee from the surety if there's a failure to pay or perform by that contractor. And the other thing is it's a pre-qualification tool as well. So a couple of considerations that we're seeing and talking about with our clients.
No, and it's huge. And being upfront with both your bonding company and your bank, if something is going wrong due to supply chain disruptions.
Thank you everybody for listening. I will include Greg's contact information at the end of this video, as well as link him in here so you can circle back with him for your banking questions.
Thanks, Lisa.
Thanks. Keep building great projects, guys.